Welcome to this very special conversation, and I'm excited about the guest we have today. Now, India's OG startup founder and investor is undoubtedly Sanjeev Bikhchandani, founder and executive vice chairman at InfoEdge. Now, InfoEdge is, of course, a digital powerhouse giving us iconic platforms like Naukri.com, Jeevansathi.com, and 99acres.com. But what's also exciting about Mr. Bikhchandani is his ability to pick winners, whether it's a Zomato or a PolicyBazaar or a whole generation of entrepreneurs that he has nurtured. So with that introduction, Sanjeev, thank you so much for speaking with us here at NDTV Profit as we take this opportunity to pick your brain on what you think about the startup ecosystem right now, the beeline for IPOs, and so much more. Great to have you on.
Thank you for inviting me.
Yeah. All right. Let's start with this scenario right now. I would say about 5-6 years ago, startup funding was the biggest buzzword, and also the kind of hiring and salaries that startups were offering. I mean, there were tales of people offering iPads to lure employees, to lure talent, money pouring in. That seems to have petered off. What is your take on the startup funding scenario right now? Is there more skepticism that has come in?
Well, I think startup funding remains robust and healthy, the way it should be. Yes, some of the excesses are over. So I remember there was a startup offering BMW motorcycles to engineers who were joining. That won't be happening. But we are seeing pretty robust funding anyway. I think early stage funding is available. I think what is happening is that when it comes to Series B round, that is when the cut takes place. And so you can get Series A, you can get your first round on a promise, but by the time it comes to the next round, you should have delivered something. And that's the way it should be.
In that sense, for the whole concept of picking winners, and this is something, Mr. Bikhchandani, you've been legendary at. I mean, to pick Zomato when you did in 2010, you put in less than 5 crores. This is worth over 18,000 crores right now. Do you think that those kind of winning ideas are still there now that this entire ecosystem has matured?
So, first of all, let me clarify. I don't think I was particularly intelligent or clever. I think all credit goes to the Zomato team for doing what they did. And we were fortunate they allowed us to invest. Likewise for PolicyBazaar. We invested in about 10 companies around that period, between 2007 and 2010 or 11. Of those, 2 was Zomato and PolicyBazaar. I think good companies, good founders, good teams pursuing a good idea, and then you stay for a long time. And hopefully it'll work out well. Now the question is, can investors do the same going forward? My answer is yes, they can. However, you got to be patient and wait for 10-15 years in the company.
Just to that point of the class of 10, Sanjeev, you talked about the 2 winners out of 10. Which were the ones that were middling, or you had to re-look at your entire investment there? And is it more, if you're looking at this as in from an investor's perspective, is this a bit of a hit and a miss? That you spread your risks wide around and something or the other will work out? What's your philosophy there?
So typically, I mean, you don't spray and pray, you don't fluke it. Every time you go into a company, you actually believe in it. You really like the entrepreneurs, the team. You believe they're pursuing a good idea. Sometimes it doesn't work out. There are many reasons for it not working out. But I think we respect every entrepreneur we have backed and every entrepreneur we have not backed also. Because understand one thing, an entrepreneur takes a risk with his or her life. An investor merely invests money, and an investor has a portfolio, so you'll do 10 or 15. A founder does not have a portfolio of lives. A founder has only one life. Therefore, he or she risks everything they have. And for that reason, we respect them. We respect them for trying. We respect them for working hard. And if it doesn't work out, we respect them anyway. And it's important that founders are respected and they get what is due to them.
Having said that, what's the best way to pick some of these winners? What is the criteria that you apply? And of course, you respect all founders, I'm sure. But when you meet a founder, when you get pitches, what is the criteria?
When we, so what I'm talking right now is what I'm saying is wisdom in hindsight. We didn't actually know it when we were doing it. But now analyzing stuff, 18 years after we first began to invest in 2007, I think the first thing we look at is some sort of evidence that the prospective customers will like what this company is trying to produce or trying to sell. Some evidence of customer traction, some natural traction, some traffic, some app downloads without advertising, some unsolved problem, some need gap, some evidence of that. And if you have that, I think that is 50% of the battle won. Then, of course, there's the quality of the team. How committed are they? How good are they? And what is your assessment of them? And then you come to other stuff like competition, like IP being created, like prospect of building a moat, a bunch of other things. But the first thing is, will the customer want what this company is trying to do? Is there customer love? If there is, we may be on to something.
So comes back to my earlier question. Now that this whole space has matured, especially with platform companies, consumer-driven tech, are there enough new ideas there? Because the moat is now low, it's done and dusted. The first mover advantage is now receding, isn't it? For a lot of spaces and for a lot of companies. When you're hearing pitches, are you hearing more and more fresh pitches?
Actually, we are. So this, there is no end to innovation. There's no end to differentiation. There is no end to, customer need gaps. They are always there. You got to look hard enough. You got to be discerning enough, and you got to pick the right ones. Certainly, a pure Me Too would be a no-no. But enough. Now with AI coming in, I think there is enough scope for differentiation.
So, let me come back to the beginning of the journey, Mr. Bikhchandani. When you start, 2007, 2008 was a very different situation in terms of the startup boom, early days, and you have all of these ideas coming to the fore. Tell us how that journey actually grew and what was the thought process behind it from your perspective?
See, you can never predict the future. So when we went in 2008 into PolicyBazaar, 2010 into Zomato, we didn't have any idea how large these companies would become or could become. We had a very simple rule of thumb: good people trying to solve an unsolved problem, back it with some money and see where it goes and keep backing it as it goes along, should it merit more money and need it. Now, so we didn't plan for 10 years, 15 years, and we had no idea that, Zomato would be over 2 lakh crore market cap and PolicyBazaar would be 80,000-90,000 crore market cap. We had no idea. We just said, let's back it and see where it goes. Now, the companies did the rest, the market did the rest, and that's life. We went in out of some belief, some faith, some rationality, a cocktail of these 2-3 things.
What about your anti-portfolio? You're famous for talking
about... And a lot of patience. I think I had a lot of patience.
Oh, surely. What about your anti-portfolio? You've talked a lot about the ones that you missed. What are some of those ideas that in hindsight you thought that, became bigger than it first seemed?
Well, okay. So, I've talked about it earlier, but we said no to Flipkart in the pre-Series A without even meeting the team. We said no to Lenskart in the pre-Series A. We said no to Ola in the pre-Series A. We said no to Snapdeal twice at 28 million. We said no to many companies that went on to create value and become big and valuable. I think about it. And then it's okay. See, I think it doesn't matter if you missed out some really good ones. What matters is the ones you did are enough of those good. And that's what keeps us going. That the ones we're doing, how good are they doing?
No, I'm just trying to understand. No doubt about it. You've picked winners and then you miss some, you win some, you lose some. But just trying to understand, what is it that helps you make it to a meeting with Sanjeev Bikhchandani? For anyone watching this, if they want to come and pitch you, what is it in their presentation that...
we are always available.
Yeah.
We are always available. There's a whole team of 15 people that is constantly looking at startups, and we meet about 1,000 startups a quarter. So meeting us is not hard. Getting the first meeting. It's post that. You see, when we do the first meeting, we also learn. We learn about what's going on out there. At the end of the day, we got Zomato and PolicyBazaar simply by agreeing to meet every startup that we came across, and sometimes chasing them. Zomato was an outbound request. Deepinder didn't approach me. I approached Deepinder. So we keep meeting people. So getting a first meeting is not a challenge, with us. I think it's going beyond that where we have a filter.
No, fair enough. But I'm saying, what is it that you're looking for? What is that X factor? Of course, the plan needs to be there, the customer need, the moat, all of those things that you would look at. But what is that X factor that you're looking for?
Well, I think the first question and most important question we ask is, where did you get this idea from? Ye idea kahan se aaya? And the answer to that tells us a lot. Was it based on a customer insight, an unmet need? Was it an idea you picked up from America and brought it here? What is it? The next is some assessment of, what's the quality of the customer hook, the value proposition. How differentiated, how compelling is the value proposition? Will the customer really want this? Does the customer really want this? Is there any evidence? I think another question we often ask is, what is the salary you'd like to pay yourself once you get our money? Now, we're not interested in the absolute number of answer. We are interested in the way the founder approaches the question. Now, I've had founders who have said, I'm 3 years out of business school, my batchmates are getting this much, so I deserve minimum that much. I've had a founder who tells me I want 30% more than what my batchmates are getting because I'm taking a risk. And there are founders who say, hey, listen, I want cost of living a little bit more because I want to not dilute more equity than I need to. So I'd rather, put all the money I get, as much of the money I get, into the company. There are 3 different answers, and they reflect 3 different kinds of thinking.
And let me guess, you prefer answer number 3.
We won't hold the founder to that. I'm just trying to understand thought process.
Just talking about that thought process, and I have the opportunity to speak to a lot of young companies. They come on the show that I do, and a lot of them are pre-IPO going into IPO. And sometimes I ask them, but why do you want to go into an IPO? They say, we need to give an exit to our investors. Sometimes they want that label that, yes, it's a listed company. Do you think the IPO route is an eventuality for any startup? It's something they should admire to or aspire to?
Well, let me put it this way. If you do take financial investors, money from them and, on your cap table, they will eventually, sooner or later, want an exit. Because typically VC funds, they are taking money from LPs, limited partners, which are other institutions and HNIs and family offices, and they commit that we'll give your money back before the fund life is over. And every fund has a life. It could be 8 years, 10 years, 12 years, but it has a life. So at the end of it, the money has to go back, which means the investor needs an exit. That's a reality. So either you shouldn't take their money, or you should be prepared that you will have to give them an exit and you have to work towards it. Now, an exit can be a secondary sale for the investor. It can be a company buyback. It can be a strategic sale, right, of the company. But all of these typically in India do not give the kind of returns, or historically have not given the kind of returns that will make an investor happy. A good IPO therefore becomes a win-win. That the company goes public, the investor gets a market exit, which is usually higher than a trade sale. The founder gets independence from shareholder agreement from VC investors. And therefore, it is a desirable, preferable exit. Having said that, and trying to make a company go public that should not go public, that is not ready for it, I think can be a recipe for disaster. So you should go public when you're ready for it, not earlier. But yes, it is desirable and aspirational because it solves everyone's problems. A good IPO solves everyone's problems.
Yeah, the question is it a win-win-win for the shareholder as well? And the track record of IPO, especially recently listed ones, have been a bit patchy. Because that's when the scrutiny of your balance sheet begins, the ask for profitability begins.
Well, there are several that are good and above water. Zomato and PolicyBazaar are 2 of them. We are fortunate to be invested in those 2. There are others as well. Having said that, if you IPO in a boom, when the market is running high, and then there's a sudden drastic correction, yes, you could be underwater. And that's unfortunate, but it does happen. And in some cases, it has happened. But if the company is fundamentally sound and the investors are patient, the company will claw itself back into profit and growth, and hopefully then it'll be okay. But there is no guarantee.
Just because we've been talking so much about platform companies, and I want to get your take on quick commerce and food delivery. It's the hottest space right now. So much competition, this whole push to deliver faster and deliver more. Do you think that the current race is sustainable, or do you see consolidation down the line?
Well, I think people will have to, in any business, eventually people have to move to prudent unit economics and prudent commercial practices. I do not believe that there is unlimited money available to burn for these companies. And therefore, I think while consolidation may or may not happen, what will certainly happen in a matter of time is a move to prudent commercial practices. And I think it will be driven by the investors. It will be driven by the need to go public, because public market investors may not be as patient as private market investors in tolerating burn.
Now, having said that, burn is one part of it. The competition is the other. And the third question is whether this is really the innovation that India needs. The most innovation we're seeing perhaps in recent times, among other things, is in quick commerce. What do you look at it as, just a product and an idea?
So I think it fits the customer need. That's why enough people are buying from quick commerce platforms. And I would not put a value judgment to it that this is what India needs, this is what India doesn't need. I mean, does India need so many TV channels? I don't know. Maybe it doesn't. But there are so many. And that's a free market. So,
Touche.
That's a free market, right?
Yeah.
That's how markets work. That's how economies work, and we live with that.
So there is about need, the question about profitability, the question about where's the next big idea. What in recent times, because you said you speak to about 1,000, or the team speaks to about 1,000 startups a quarter. What is one of the best ideas, and as much detail as you can share, that you've come across in recent times that has really gotten you excited?
So the truth is, when you meet really early companies, you don't know if it's the next big idea. What you do know is that here is something seemingly good, interesting, getting some customer traction, users are coming, and the team seems good, right? And then you go in out of belief and faith, and a certain leap of faith, I'd say, and then work with them and hope for the best. Now, what I do know from trends, we can see is that AI is going everywhere. Okay? Almost every startup we meet today has got an element of AI in it. Some are AI first, some are AI enabled, some are AI, AI powering old business models and differentiating therefore. So I think one big trend is AI. I think 5 years, 10 years from now, a lot of companies, including mature companies, will be doing a lot of things very differently using AI. So imagine a situation where you have an AI-enabled news channel like yours. Okay? Do you need a real newscaster? Or can I have an avatar of Tamanna looking like you, but actually it's not you? And you are actually a chatbot, voice bot, AI powered. You are asking questions, and depending on the answer the interviewee is giving, you are asking follow-on questions. Okay. Now suddenly, Tamanna can interview people. The Tamanna avatar can interview people 24/7.
Wow.
Okay, and you are actually working only 2 hours a day, and your avatar is working 22 hours a day. That's possible. Right, it'll also save cost, for the channel, and it'll create 10 times more content.
How do you know I'm not an AI avatar right now?
So I'm willing to bet that within 5 years or 10 years, there will be an AI avatar based, of news anchors.
Yeah, surely. I mean, if I get to work only 2 hours a day, definitely I'm all in for it. The last point I actually want your views on, and this is a little off the whole startup investment space, but I think it's interesting to know, because you're very passionate about education as well, and higher education. You've been, involved with a very named university, and we're seeing a time right now where Indian students who are very bright, want to go abroad and study, and that has been the dream, right? I'll go to an Ivy League school, or I will go to one of these countries and study, and they're seeing pushback. It's no longer as safe, maybe no longer as exciting. You don't know what's happening with your career. The question is, do we have enough in India in terms of options for bright people to study here and grow here as they wish?
See, capacities are never static. Two, disruptions are never permanent. Okay, so there was a COVID disruption. We came back. There's currently, a difficult time in the US, maybe for international students. But who knows? Maybe this will go away in 2-3 years. We don't know. Of course, for the current student, that time has gone. But for future students, maybe it'll come back. Now, does India have enough capacity? I don't think India will ever have enough capacity, because we have 1.4 billion people. But I do believe capacities are increasing and they're improving. And so we are getting there. And the response to, capacities getting constrained in the US for Indian students is possibly within a year or two, capacity expanding in India. At Ashoka, we have already had conversations in our WhatsApp groups among the senior people that, listen, we need to perhaps accommodate people who are leaving college midway in the US and want to come back, simply because that is the right thing to do, that they need a solution. We don't have a solution yet, but there's at least a conversation happening.
So, okay, more conversations happening. Hopefully there will be solutions and options for Indian universities, to cater to those needs of bright students. Definitely the entrepreneurial spirit has more options here than ever before. Just as we round up, Mr. Bikhchandani, isn't this an exciting time when very bright graduates are coming out and saying that I don't necessarily want that MNC job, I want to start my own thing?
Yeah, so entrepreneurship in India has become a mainstream career option for educated people who, say, in an earlier era, would have largely preferred jobs in larger organizations, prestigious organizations. I think for many of those kind of students, entrepreneurship has become a mainstream career aspiration, and I think that's a good thing. Because when our brightest people become entrepreneurs, I think entrepreneurship will really boom.
Well, entrepreneurship will boom, so will jobs, and hopefully there will be those investors out there like Mr. Bikhchandani to spot all of that bright talent. Thank you so much, sir. Absolute pleasure speaking with you.
Thank you so much, Tamara. Thank you for calling me.